So a quick video. Remember when I sent this chat to us yesterday, and it was a sorry, not yesterday, last week, and we had something like this. We had just this pattern, this W, okay, and then it's common when you read online. Say when you see a double bottom, it shows rejection of price. Price hit support twice, and then when you get a break of the neckline, you buy, or you look for a retest, then buy, right? Now I want to show something, okay? So you would agree with me that after this double bottom happened, reverse was the case, apart from the fact that we we didn't break the neckline, because for you to break the neckline, you're supposed to have a candle close above it. We only wicked above it. That is this week here. Let me make this larger so you see it. That is this week, which is called the what's the name, the inverse hammer, or whatever it's called. Okay, I really don't care about the names these days. It's the psychology behind it. Remember what I said. In technical analysis, what you need to understand is the market structure and the psychology behind the candlesticks. Okay, so what this particular candlestick is showing here now, this one, I want to focus on this one. Where is that brush to? What this one is showing here now, price opened around here, that is here, went up, buyers came in, pushed price up, but then sellers came in and still returned it back to the open, then tried pushing it down a bit more, then before some buyers came back, and then it's the market for that day closed here. So this was the high for that day, this was the low for that day, and all this middle stuff was the price action that happened that particular day. Okay, so now what this shows was that price was price was greatly rejected, especially to the upside. Price tried going higher, but then it was rejected. I remember what I said then, that if we don't get a candle close above this particular structure here, let me show us again. If we don't get a particular candle close above this particular structure, then, and we see a rejection, we should be expecting a sell to 13 to 16k, right? So now currently we are at 19k, and if you check, what we had was a wick above. We did not get a close. This is not a close, this is just a wick, right? So like I said, in your technical analysis, if you want to improve, and this is happening on the daily time frame. So after these two indecisive markets, that's this day and this day, what some folks would have done, although it would be very risky, but then your what is it called, your portfolio size will determine the kind of risk you get. After this first rejection happened, and then this second indecision happened, what some folks would have done would be just open a short trade at the close of that candle, set your stop loss a few distance above the high, let's say here, something like that, and then target the next level, which would be around here, depending. So this would have given you a 2 to 1, which is good, actually, which is a good trade. 2 to 1 risks to reward ratio. Okay, so you would have risked 4.61% to make 11.2%. All right. So at the end of the day, every other thing we know about technical analysis is just how do I put this now? It's just more English, let's put it that way. Although there are some guys that have done research and have propounded theories and all of that, but the truth is, if you don't understand these basics, you will end up thinking those things are magic. They are not. When you look at those things, you see that it's just they now decide to bring this one and bring this one and bring this one and join it together. Okay, but at the end of the day, everything still falls back to market structure and the psychology behind every candlestick. If you are able to look at just your charts, candlesticks alone, and then you are able to um, spot the structures that are currently forming in the market, and then you're also looking at the candlesticks, the ones that are showing you strength, the one that is showing you rejection, the one that is showing you indecision. Once you have these things, like you're able to, it will take time, but as you keep looking at it, your eyes get strained. You wouldn't need any other indicators. You wouldn't need, many of these stuff that we add in our charts when we start technical analysis as a new trader. So I'll be ending this video here.